Welcome to the SaleAway podcast. My name is Trey, and today I am joined with Jake and Zach, who are both co-founders and brokers as well. If you're an online business owner or an aspiring online business owner, this is the podcast for you. This episode will be part 7 of our 10-part series, How to Sell an Online Business. It is important to follow this series step by step so you can successfully sell your online business. If you haven't listened to part 1 through 6 of this series, make sure to go back and give it a listen before moving to part 7. Congratulations, you have accepted an offer. In this episode, we will be going over the due diligence process and how to prep for this phase. So the topic at hand is, if you're unfamiliar with what due diligence is, it is the process of examining the details of a transaction to make sure it is legal and to fully apprise both the buyer and seller of as many facts in the deal as possible. So in layman's terms, it is the fact of a buyer performing background checks on all aspects of a business before signing the final closing documents to take over the business. Due diligence can vary from buyer to buyer or even business to business, but what we will go over today is a general outline of what a potential buyer will be looking for in the due diligence stage. What we typically see when a buyer is conducting their due diligence is, from a surface level, these 3 components of your online business: financial, legal, and operational. So I'll go ahead and pass it over to Jake to get this underway and talk about the financial component of the due diligence process.
When it comes to financial due diligence, essentially what a buyer is going to be doing is taking a look at the economic situation of your business, as well as breaking down some of the more business specific financial aspects. And so I'm going to go ahead and break this up into kind of 2 different segments of financial due diligence. And the first one is going to be analyzing and verifying the existing financials. And then the second part is going to be analyzing all of the business level statistics. So that's for e-commerce stores. We're thinking about average order size and conversion rates and things of that nature. And so with the first part, what a buyer is going to be doing is looking at your income statement, your balance sheet, your cash flow statements, if you have those. And essentially the goal is verifying with 100% accuracy or as close to 100% accuracy as possible that what you have in your financial statements is true and accurate. So if you're saying your business makes $100,000 a year of annual profit, what a buyer is going to do is he's going to go through the P&L line by line, verify that first of all of the revenues are there and that they can be tracked back to sales order or cash receipts, and then verify that all of the expenses are included there as well and are as well verifiable. And so the point here is to get a full understanding of the financial profile of a business, but also verify that what the seller says the profitability is what actual profitability is. There's a lot of issues or a lot of inconsistencies from time to time when you have a business owner who performs their own financials. A lot of times they're not doing things in a generally acceptable accounting way, and so there can be discrepancies that way. And it's also very easy if you're doing them manually by hand to forget expenses and things like that. And so this part of the diligence is really to verify that they're getting as much profit as they're paying for. The second part, which is more so kind of analytical and subjective, is analyzing business level statistics. And so like I mentioned earlier, for an e-commerce store, that's going to be analyzing average order value and the number of orders and seeing where those are trending. And really the goal here more so is to see what are the trends of the business. Say average order decreased by $20 compared to last month. Well, why is that down? Why is this trending up? Why is this trending down? It's to get a better feel for what the buyer can expect future performance to look like, and try to analyze the most recent trends to be able to do that. And as mentioned, it's going to be very specific to the type of business you have. And so for content sites, you're thinking, what are your advertising RPMs? For e-commerce, it's conversion rates, number of orders, order size, it's sales by product. And that's applicable to any other kind of online business that sells info products or anything of that nature. So one thing that is going to be crucial during this stage, specifically for e-commerce businesses or any business, typically e-commerce, that handles physical inventory, is going to be performing an inventory count and verifying the amount of inventory that they're paying for is the amount of inventory that they're receiving. So at this stage of the process, once you have an offer signed up and the potential buyer is asking for all of this extremely detailed information, they're likely going to start asking for access to back-end reports and live back-end access to, say, Shopify, your eBay platform, maybe your WordPress site. We would say it's okay to provide view-only access at this stage so that a buyer can get in there and pull whatever reports he wants to be able to pull and look at the information that he wants to look at. Another thing that's very frequently requested is bank statements and statements from PayPal, statements from Stripe, statements from anywhere where you receive money, and then those tying back to a statement from a bank account that shows that the money actually hit your account. Obviously, do not give your login information for Stripe or PayPal or your bank account, but it is completely normal to pull bank statements and send those over to a potential buyer. So just know at this stage, you're likely going to start being asked for access to some information. It's completely normal, and so long as you do it safely and provide view-only access, shouldn't have any concerns there, so long as you're not providing them access to any essential information or access to where they would be able to go and change a routing number or a bank number to their own or something of that nature. So for the most part, I think that kind of wraps up the financial diligence. As I mentioned, there's really two things here, and that's verifying revenue and profitability, making sure they tie back to the numbers that they bid off of. And then the second thing is just reviewing kind of business level financial statistics to see what trends are taking place in the business and get more insight on, kind of future expectations or future projections of how the business is going to perform. So with that, I'll go ahead and pass this one back over to Trey to talk about legal due diligence.
All right. So once again, as with all of these components, it can fluctuate from business to business. For example, when it comes to legal due diligence, an e-commerce business that is heavy on inventory will be a big component here due to, supplier contracts or purchase agreements. The reason for this component is really just for the buyers to look for those hidden risks. And so in this component, what you can expect a buyer to really look for is the following. We just have a list of 6 here. There are more, but this is just typically what we do see from a buyer. So the first one is going to be leases. This really only applies to those that do have a brick and mortar, either a distribution center or if there is a brick and mortar store. That is essentially our last business that we sold. They did have a warehouse, and that did go with the business, but the buyer actually decided not to go with it just because of geographic borders, and so they actually decided to go against it, but the seller did actually own that warehouse, so it wasn't a big deal there, but obviously they did have to talk about the lease and that warehouse. Another one is going to be purchase agreements or distribution agreements as well. So a distribution agreement is a contract between a supplying company with products to sell and another company that markets and sells those products. Again, this goes back to the business that we did sell that with the lease. They actually had 10 plus suppliers globally. And so one thing that we really wanted to make sure when the buyer took over was just ensuring that those supplier relationships would stick with the buyer and not be just held to the seller. And so that was one big thing with that business, was just ensuring that it would be a smooth takeover with the buyer and the supplier relationships. Another one is going to be trademarks, copyrights, or patents. Buyers obviously want to know if these have been filed properly, just to ensure the legality of them, just ensuring that they're not going to get caught up in some legal issues when they do take over the business. The next one is going to be articles of incorporation, which this has many names, such as the certificate of incorporation or the corporate charter. Again, there are many names on this, but just to really verify the existence of your business. And then the next one is going to be business registration documents. Again, just making sure that the legitimacy of the business or entity they are purchasing. I went over that really quickly, but the legal aspect is just really looking over just ensuring that the business is legal, is an actual entity that is registered with the government, and then going over those leases, purchase agreements, distribution agreements. So again, going back to that e-commerce, if you do have some heavy supplier contracts, that goes back to that, and then trademarks, copyrights, or patents. The legal component can vary, like I said, from business to business, but something we can assure you is that a potential buyer will be looking into the trademarks, copyrights, and patents, articles of incorporation, and business registration documents. So whenever you are getting ready to complete this due diligence process, make sure you have that ready for them, just to make it a quicker close and quicker due diligence process. So now I'll go ahead and pass it over to Zach to really touch on the operational portion of the due diligence process.
All right, everyone. So moving on to the operational side of things here, the operational component of the due diligence process is where a buyer is really going to investigate the actual operations of the business. It's a big component of the due diligence process because it really gives a buyer a direct look of how your business is run on a day-to-day basis. And in this stage, you'll expect a buyer to ask for back-end access to your analytics, Shopify, Facebook, Instagram, any other social media accounts. And again, we just want to touch on this. Do not give full access, or we wouldn't recommend giving full access to the buyer, even though they made a formal offer. You want to essentially give them access or read-only access so they can see just enough, but you don't want to give away too much of the information or the secret sauce about the business. But anyways, in this component, you can really expect a buyer to be looking into the following few pieces here. And first, that's going to be your business's day-to-day operations. And so that will be a lot of the hours per week, how much time you're spending on the business, what you're doing on a daily and weekly basis. That may be even something that it may be worth having a walkthrough, putting aside a few hours in a day to actually discuss and maybe video chat with the buyer that made the offer and just show some of the basics of what you are doing on a daily basis. And then additionally, any part-time employees, any full-time employees, virtual assistants, whatever employees you may have for the business. You just want to touch on the responsibilities that they handle every week, and any responsibilities that they're involved in to run the business on a day-to-day basis, anything involved with growing the business, etc. And next, another operational piece is going over the marketing activities. So probably a bit more insight for the buyer as to how much money is being spent on advertising for the business and how much money is being distributed to each of the different marketing strategies, essentially, whether that be Google Ads, Facebook, Instagram, whatever ads, maybe giving a bit more breakdown and a bit more analysis and insight into how that advertising money is being spent. And then also tying into that marketing, you have SEO. So diving into the different SEO strategies you put in place, how you're writing content or getting backlinks, whatever you're doing in order to essentially drive organic growth to the business, and what you have done in the past, of course, as well. So finally, moving on to traffic statistics as well. This is where you'll give a better breakdown of where your traffic is coming from. And so that could be a breakdown of organic versus paid traffic, where it's coming from geographically. So whether that be more broad, like the US versus UK and Australia, breaking it down by country, or if most of your traffic comes from the US, maybe even breaking it down if you have a few states that generate most of your traffic. Um, so again, just providing all of that information, that analytics access, so the buyer can go in and have that information. Um, and then additionally, the buyer's going to want to look into whether traffic is increasing, decreasing, staying constant, seeing if there are any trends recently that could have caused traffic to go in any one of those directions. And lastly, here we've got competition. So obviously, the buyer is going to want a better picture of the competition in the industry, who you're competing with directly, who you may be competing with indirectly, and especially with those indirect competitors, if anyone could enter your business, um, enter your specific industry, and kind of jumpstart and get moving quickly. Any buyers are going to want to do that due diligence and find out more about that competition, any risks that may pose to the business. Um, so I think that just about covers it up as a final summary for the day-to-day operations. Again, those were just the hours per week, any part-time employees or virtual assistants that you may have working for you, marketing activities, traffic stats, competition. The buyers are going to want to do a lot of due diligence and get as much information as possible on that. But again, just as a final reminder, ensure that you're not giving away too much information, because the deal may still not be officially set in stone. And so until that happens, you don't want to give out everything possible about the business. And now, just to touch on what we've discussed throughout this podcast, I'll do a very brief overview and recap here. So again, just going through the due diligence process here, what a buyer is looking for are the financials, and that's going to be obviously an incredibly important component and piece of the due diligence process there. So again, this is where we discussed a few episodes ago, having those financials all built out and ready to go. That should make this process a lot easier for the buyer, help that transaction move along. Then you've got the legal, which Trey touched on and discussed the few most important pieces that buyers are going to be looking for in the due diligence process. And those were the trademarks, copyrights, patents, articles of incorporation, and any business registration documents. And then finally, I just briefly touched on the operational component. And that's basically just covering the day-to-day of the business, all of the nitty-gritty, anything in between or anything outside of the legal and financial components, essentially. So with that, I think Jake had a comment that he wanted to throw in here at the end, so I'll pass it back over to him.
Yeah, so the one thing that I just wanted to kind of emphasize here is that depending on the process that you're running, things can play out in a couple of different ways. You might have one buyer who wants access to the Shopify backend before they submit an LOI, and then you might have one who's okay submitting an LOI and then getting access afterwards. It's really up to you at the end of the day how you want to run your process and how kind of selective and secretive you want to be with some of the more kind of detailed financial information that you're providing. At a minimum, what you should be doing is providing your financial statements so that they have a clear picture, and you should be providing some high level kind of business level statistics as well so that they can confirm their interest. The last thing you really want to get to is to get an offer on the table and then you give someone all of the information and they're just like, whoa, like this was, this doesn't look right to me. I didn't have this information before, and this is a significant piece of information that affects the way I look at this transaction. So at the end of the day, due diligence is for a buyer to reconfirm their interest in purchasing a business and reconfirm the price that they're paying for it. And so you want them to have good comfort going into the LOI stage and the due diligence stage. You want to have good comfort that there's not any red flags that they're going to uncover. So you want to provide enough information kind of upfront to where you're not harming your business, but to where you're not going to get in a situation to where you provide a couple pieces of information and someone's like, yeah, this is a deal killer. So that's all I had. Up to you on how you want to run your process, but we see it work, different types of ways. And so long as you're being protective of your information, I wouldn't say there's a right or a wrong way to do it.
Yeah, absolutely. And I think that's a great point to go ahead and wrap this up. So if you guys, the listeners or viewers, happen to have any questions, please feel free to reach out directly to our email, dealteam@saleaway.co. Again, that is dealteam@saleaway.co. We appreciate you guys for tuning in. This is available on Apple Podcast, Spotify, Stitcher, and YouTube. And we would really appreciate if you enjoyed the podcast, click that like button, subscribe button, or add our show to your favorites so you can be in the loop whenever we have more shows in the future. Roll the outro.